Hello guys, and glad to have you on board again today. Lots of things to talk about today. Eventually the planets would start to align themselves today. At least we are still dealing with very important levels all across the board. So let's uncover and see what types of signals we might have and things we would need to talk about. So today we're going to talk about WTI, EURJPY, USDJPY, Eurodollar, Bitcoin, 30-year bonds, VIX and VIVIX couple, and the Nasdaq to Dow Jones ratio. So pretty much of a complex topic to talk about, but these are the risk measurement stuff you probably already know about because we're following them for quite some days. So let's start in order of sorted out there. So the first one will be the Dow Jones to Nasdaq ratio, still slowly but steadily going down, which is once again positive, but still I wish we could have some kind of an acceleration, a switch, something that makes sure that others have been doing the same. But until then, that doesn't mean it has to happen that way. So if we were continuing into that slippery slope type of thing in which we just grind our way down into this 45-degree angle stuff, I wouldn't actually disagree with that. That's actually the safest and the most solid structure to keep on going. So if we don't fall off the cliff like assholes once again because the market is stupid and we have to do things to force the Fed into more actions and stuff like that, just grinding our way down is actually a quite good structure to me. So don't forget that most of the time people want to be proven right or wrong ASAP for this simplest but stupidest reason, that is a natural bias for impatience into human beings. So don't forget that having a plan is good, it's actually totally necessary, but wanting the plan to act and react immediately is human but stupid. So yeah, that doesn't necessarily behave the way I wish it could happen. Days are passing by and nothing happens and the VIX is still under pressure but still not breaking and stuff like that. But until then, it's fine. The markets are not yet confirming my reversals, but they have validated. So validation is okay. Confirmation will be the next step. And the confirmation doesn't have to be a massive fireworks or explosion and stuff like that. It can just be keep on rolling into the same direction one day after another, okay? So as long as this thing goes on, I'm fine with that. I doubt we're going to find a support out there, but just need to make sure that this trend channel isn't going to be paid. And so far, we have absolutely not a goddamn clue of a bullish momentum to emerge out of this, okay? So yeah, patiently waiting for more information. In terms of VIX, we're still sitting below the resistance. Nothing's broken so far, so we're trying hard, of course, to maintain things under pressure. But the thing is that today is the expiration, so we are going to close the expiration not at the lows but at the highs. So today is an important thing because we're going to roll over to the next contract and force whoever's in out. So today could be a volatile day for volatility itself, but still the VIVIX doesn't show us any such a thing. We're still dealing below that resistance, and even though the fact we might be accumulating out there, and I'm still totally favoring a bullish outcome out of this, I still can't say for sure. Because if you have a look at the VIX, okay, VX contracts, if you have a look at the next expiration, which is going to be November, so November's expiration on the VIX already prices in quite high. So the thing is, it's not going to be that easy for people to navigate these contracts because they have actually, oh Jesus, that's not that big actually. I thought the spread was more than that. We need to dive into a much more complex analysis out there. So they're pricing 29. Oh geez, the spread is pretty narrow. Okay, the new contract is pricing in 29.9 when the previous one is still, for the current one, still pricing 29.27. So yeah, there is a huge gaps to eventually get to fill. So yeah, today lots of things could happen with the volatility contracts, but needs to be proven right or wrong, okay? So until then, patience required. Jesus, what the hell's that? Okay. Until then, we also have to talk about bonds. Bonds have broken the support, which is once again not a good sign. That means investors are switching to safer territories. Therefore, we should have volatility on stocks. But, I mean, earnings seasons roll in, and the only things we managed to see so far is just intraday volatility, always managing to save the dips. We still haven't reacted positively upon supportive areas. We're still failing below resistances, but once again the support still holds, as we do have a lot of tensions everywhere on our correlated asset lecture. We should see the supports breaking the fuck down, but still that's what I would like to see, and I'm still not managing to see this on the charts. Okay, we're also going to have to look at WTI, which I think I'm going to sell today. This, oh shit, I just hit the post button not willingly. So anyway, I don't know if I had a look at the 30-year bonds first. I think I did. Okay, so if I didn't, 30-year bonds have broken to supports, and therefore this is not a good sign, not at all. We're breaking cycles this time, so it definitely highlights the cluster was figuring out. So I think we're on the verge to see these things accelerating, so not bad at all. It's very great actually for me, but still, once again, I'd like to see this motherfucking stock market reacting. USDJPY, this one I'm going to short sell. Like I said, it's 4-hour bearish engulfing that might be going on in here. We had an overbought cluster below a breakout structure. I wanted the price to go on top of this, and it did. So now that we've done it, I'm totally agreed with the short selling opportunity. Just need a candle to react, and therefore I'm going to wait for 2.5 hours, but I'm definitely willing to jump in. Okay, so use the WTI. I'm going to sell the crap out of this thing if we manage to hold this candle close. In terms of gold, I'm still bullish with a stop at break even, but let me be honest, I think I should really profit take the motherfucking prices out there. I'm not willing to short sell gold, definitely not, but I have some gains in here, and I'm questioning whether or not this can actually really accelerate. So I'll let it go, but if I see any reversal on the gold, I'll definitely profit take as well. This is where the game happens today. Look at this big beautiful motherfucker. So it's not doing well for the USDJPY, definitely not well today, but it's hard to figure it out as a one battle. Okay, we would be breaking the trend channel in here, and I personally think that breaking it, okay, this is the equivalent of this trend line, breaking this is not a good sign for bulls. We have several, I mean, not to say hundreds of lower high points. Jesus motherfuck, at some point we're going to make it through a support. Maybe it's going to happen soon, okay? But until then, the problem is the euro dollar managed its way up as well. It is dealing with third range boundary areas, and I wish we could see a difference between the two, therefore seeing the EURJPY going to the downside. This is the one I need to make sure that the market is switching to risk off territory and buying shit tons of yens instead of getting into euro, okay? So I need to see a difference between euro and JPY. It starts to roll as expected right now, but it's too early to consider that a one battle, okay? We would be failing below resistances, failing to break the trend channel, which is real great. If we're doing this, if we're failing out there, that means we're definitely going to get below this context later on, okay? So the planet starts to align. It's great, but it's still a little bit too early to consider that a one battle. Until then, what the fuck is going to happen with Bitcoin is a really tricky question to answer. But my personal favorite out there, because I think whatever happens out there is great. Just have a look at this, okay? This thing means there's not enough price volatility to deal with this area with a true risk management and stuff like that. That means the short-term signals you might get out there might turn out to be irrelevant. But this, oh man, this is great. This is exactly what I wish I could see yesterday, okay? I wish we would have this volatility boundary in here. We didn't, but the fact is that we're still just breaking the technical level in which signals would totally matter, but the fact is we had not enough volatility to deal with them, okay? And actually nothing turned out to validate. The 4-hour candle's just gone straight up, okay? We broke through this level just to trigger a volatility boundary. So you can be damn sure I'm going to sell the crap out of these Bitcoins today. Jesus fuck, they might be doing it right now. So normally I'm waiting for this candle to close 25 minutes and I want to get a bearish engulfing of this candle to actually properly trade this thing, okay? But what we will get would just be dealing with the interesting price area, working around all the DOMs and short-term traders, just fucking them all up so they trigger their stop losses, and then we just got the fuck back in. That would just be a typical evening start pattern, breaking out of the technical level just to trigger some dumb trades and get back in. Remember that the volatility boundary or the volatility alerts means you need to trade with the volatility boundary limitation, the standard deviations, okay? So you might be wondering, oh Phil, look at that, I mean it's opening right up, so why the hell are you trading these prices? The moving average, the standard deviations are 12.6. Don't forget that these things readjust. Okay, that's the problem with volatility. The volatility will close on Friday. On Sunday. So the thing is that if right by Sunday we were back there, which I believe is very likely, returning back to volume, okay, then that means this volatility boundary will probably do this, and you'll get to close it right there, and you'll say, oh man, we've rejected the volatility boundary, great. Well then, as we test it right now, we might be having some volatility boundary much higher than that, okay? So it needs to readjust, and I personally think that this is the totally tradable area. I just need to see a 4-hour bearish engulfing to consider this thing a done and tradable signal. So the day starts pretty weird. But once again, I see nothing in the fucking stock market. And it's really, absolutely staggeringly stupid. I can't stress how stupid that is. But once again, even though I have lots of early clues that some bearishness is down the corner for stocks, I just can't see that. I have a validated third range boundary. Sure that is. But remember what we've said yesterday. I need to see what happens next. If we invalidate it, then simply means I'm fucked, and therefore I don't want to reinforce too early. I will reinforce when the trade will be confirmed, which means I need to have them candle closes below the 50% context, which is approximately 3,400. Okay, I need to see the prices going there and holding candle closes. And if that's the case, then I'll know that I'll have significant enough information to consider reinforcing my bearish positions. Until then, still bearish, but tiny bearish, okay? And patiently waiting as we roll into this earnings release season. That being said, I wish you guys a pleasant day. So my action today, selling WTI, selling Bitcoins, and probably selling stock market as well if I have sustainable enough, if I have viable signals. Until then, all I have is a suspicion, and I'm not going to work until I get the appropriate candle closes, which could turn out to be true a few minutes from now, but as we speak right now, I just got nothing but clues and speculative guesses. Okay, that being said, I wish you guys a pleasant day.